Fubo, talking a little negative article here in regards to Fubo can't win the game with high debt and low gross margin. So going to get into a little bit of maybe a bearish video in regards to Fubo and kind of react to this, kind of give my opinions and perspectives. Obviously, Fubo, been talking a lot about it over the last few weeks. I'm obviously very bullish on the company long term and short term, to be honest. But I love kind of reading through any type of bearish thesis on any of my stocks I personally hold. I always am willing to, a mature investor can always hear a bearish case. You could always be willing to hear why the stock market's going to crash, always be willing to hear why your stock's going to crash and why your stock's not going to do good. Whether it comes to fruition or not, that remains another subject, right? Whether you believe that or not is another subject, but you should always be open to listen to others' bearish and bullish thesis on stocks. Usually if you're not open to that, it's usually just kind of showing a little bit of immaturity. So I want to react to this, kind of give my opinions and perspectives in regards to this. So hope you guys enjoy this. As always, appreciate y'all joining me. Thanks for being here. New all-time high subscribers in the history of the channel. I appreciate each and every one of you that have subscribed to the channel. And also, I did a partnership with Seeking Alpha a few months ago. I'll put the link in the description. I believe it's for a free trial for Seeking Alpha. So if you want to try it out, read a bunch of bearish and bullish articles in regards to stocks you own or stocks you're looking into, you can obviously do that. I'll just put that as like the pinned comment here today for this video. Alrighty, so Fubo can't win the game with high debt and low gross margins. By the way, I love the title of that because obviously Fubo is very sports focused, and so it's kind of hilarious, right? So Fubo's recent rally in the stock does not reflect its underlying liquidity issues and high long-term debt. The company's high content costs pose a challenge for generating cash and improving profitability. The stock is expensive on a net revenue basis when taking out subscription costs. Fubo's was one of the high-flying stocks that crashed back to earth given the situation in the market, right? Certainly, yeah, Fubo was just one of a million stocks that was a high-flying stock kind of at the end of 2020, beginning of 2021, when every freaking growth stock was a high-flying stock, and then went on an absolute vicious crash, so no doubt. Recently, though, Fubo stock has rallied, yet it is still trading at a fraction of its price just 2 years ago, and is now a good time to enter. Fubo liquidity not as good as it seems. Fubo had an outstanding, so that's interesting. They put that they felt Fubo had an outstanding last quarter. I think that's interesting. Q2 2023. Delivering results past analyst expectations. The company's revenue grew by a massive 40.9% to $312 million versus analyst expectations of $302 million. Fubo was able to narrow down its operating loss from $91 million in the prior year to $52 million in this year. Okay, and let's just talk about that for a moment, folks. That is a monumental step in the right direction for Fubo. And if you're wondering why this stock has gone so beast mode over this past, let's call it 3 to 6 months, that's why. Like, no one was really anticipating Fubo to start cutting down on losses as much as they have, as quickly as they have, right? And when they're cutting down on these losses such a substantial way, it takes a lot of the bankruptcy risk out of it, right? It certainly lessens it. And then it also takes into account, oh man, they could reach profitability faster than really anybody anticipated. The company's kind of mentioned around, getting to a great place with profitability in 2025 and moving forward. Is it possible we could see a profitable quarter in 24? Well, at the rate they're increasing here in terms of fixing profitability, it's at least a possibility, right? And so no doubt that's a step in the right direction. The company also made significant strides with regards to its liquidity position. Free cash flow improved from $84.5 million, cash flow burn, okay, has improved from $84.5 million burn to $75.7 million in Q2 2023. This translates to roughly $9 million improvement in cash usage and from 4 operating activities. That's thunder. By the way, folks, I might have to, make this video in the garage at some point because it looks like there's a big thunderstorm coming in here in Summerlin, Las Vegas, Nevada. So we'll see what happens here. Okay. Now, so looking over these results, let's start with the good news. It's definitely good that Fubo's management has taken steps to ensure that it has the bare minimum of liquidities to survive. The company is targeting cash flow positive by 2025. With about $300 million in cash and cash equivalents, the company should have enough liquidity to make it to 2025. No doubt, especially if they can get their cash flow in a much better place much quicker than folks anticipated in profitability, which is certainly a realistic possibility now at this point in time, right? Another piece of good news is that digging through the company's financials, it can be seen that the bulk of the cost savings for the last 6 months have come from general and administrative expenses. I like seeing cost reduction coming from G&A as it highlights the company is operating leaner and more efficiently instead of cannibalizing future revenue by gutting marketing technology expense. That's a phenomenal point by this gentleman here, okay? The company's G&A dropped by nearly $19 million year to date from $49.5 million to $31.1 million. 100%, he brings up a phenomenal point here. At the end of the day, you can cut expenses a lot of ways, right, and get to profitability. One way is you could obviously, like he says, you could gut marketing, but the problem is you gut marketing, you're basically pulling away future revenue. Think about it, like if Fubo could decide to not spend $1 on marketing moving forward, right, but that's less ads that would be seen out there, less customers that would sign up for Fubo that would then get on subscription plans that hopefully will be they'll hopefully have Fubo for months or years or decades to go in the future, right? So that's a phenomenal point he brings up there, right? And obviously the company needs to spend on R&D to continue to innovate to make their product as good as possible. However, on to the bad news. The bad news. Here we go, baby. Okay, let me take a drink before we get into the bad news. Alrighty, here we go. The company has long-term debt of $403 million, the bulk of which is from its 2026 convertible notes. These notes have a conversion price of about $58 per share, so I doubt these will be converted to equity anytime soon, given that Fubo stock has traded below $10 for close to 2 years now. Yeah, man. If Fubo is $58 in 2026, I would be the happiest freaking guy. I tell you that much. But yeah, not very high probability. As coming from somebody that's bullish on the stock for the next several years, yeah, I don't think Fubo is going to $58. I could be wrong about that, but that'll be something I'd be happy to be wrong about, right? The company's total assets of $1.24 billion, which at first glance make it seem that Fubo is safe covering its debt. However, there are two issues that I'm seeing. The first is a significant portion of the company's assets are intangibles and goodwills. Good point. Company's intangible assets are $166 million, and goodwills is $621 million for a total of $787 million. Taking these out from the company's $410 million equity would turn it negative. That's a great point. I can't argue against that. There's nothing I can really say to argue against that. The second issue is that the company expects to be cash flow positive by 2025, meaning that it would be seeing at least 4 to 5 more quarters of cash burn. Therefore, we can expect a cash position of $299 million to be further watered down, 100%. There's no debating that. Yes, no debating that. 100% the cash balance is going to go down. Question is, how far does it go down to? Does it go down to 100 million, 50 million, 150 million, 20 million? I think that's the only question, right? These convertible notes have a very low rate of 3.25%. These notes will most probably be refinanced at much higher rates in 2026. We'll see. We'll see. That depends upon how long the economy can hold up, how long the Fed wants to stay higher for longer. A lot can change between now and 2026. And I mean, a lot can change between now. Just look at how much has changed in the past 2 years. Look at Fubo. Fubo used to be, what, a $30 plus stock? It's a $2 stock here today. The Fed funds rate used to be 0 not that long ago. Now it's 5% plus. We're at the highest Fed funds rate we've seen in 20 plus years. Therefore, I expect Fubo's business to be difficult, even if it becomes cash flow positive in 2025. Fubo's gross margin is really low. Having a large amount of debt is fine if the company can make enough cash to cover these expenses. However, the issue for facing Fubo is that operating, which is fundamentally a low-margin business on a gross profit level. In other words, as a company's revenue increases, so do its costs of making it difficult to generate cash. Historically speaking, the company has grown its revenues exponentially as a CAGR and has a CAGR, compound annual growth rate, by the way, CAGR, of more than 4x, but gross profits have been negative until recently. Yeah, but that's the big change, and you can't just miss this point, right? Fubo's margins have increased exponentially very recently, specifically in the past few quarters. If what we see continues on, let's just call it a situation where we could be looking very good very quickly in regards to margins. And when I say very quickly, I mean within the next 4 to 6 quarters, something like that, right? That being said, Fubo has shown improvements of its margins in Q2 2023. Year-over-year gross margins rose from negative 6% to 7% positive. While an improvement, I don't think anybody should break out the champagne just yet for Fubo. This simply means they're not losing, is not losing money per revenue, which is a small victory. I mean, I don't think that's a small victory in all due respect. I think that's an absolutely monumental victory. When you have negative gross margins and then you flip them over to positive, you're definitely on the right trajectory, right? Fubo obviously has an immense amount of progress to make when it comes to gross margins over this next year or two, but this is good. Okay, let's just call it what it is. It's very good news. The biggest issue is that the content costs are still very high. While these costs have come down this quarter, it still represents 87% of revenue. Here's kind of a deeper look. If you want to pause the video there, you can kind of take a look at that. That's from actual Fubo presentation on their investor relations page. Okay, they've made a lot of progress. As detailed in the company's 10Q, Fubo runs the risk of cost increases in the future as long-term contracts may be renewed at higher prices. Having control over content costs is the main reason why Netflix has decided to get into the movie production industry. In terms of streaming, content is king. So let me push back against that, okay? Netflix is a stock I've owned here and there over the past, right? And here's what I'll tell you in regards to Netflix. Look at Netflix cost. Look at how much they're spending. It goes up quite substantially year over year. So I don't want to we shouldn't act like Netflix has it all figured out. At the end of the day, Netflix is spending exponentially more each and every year when it comes to, what they're doing when it comes to production. Also, let's be very clear about Netflix. We have Hollywood strikes that are very negatively affecting them right now in a substantial way, right? So I think that's important. In terms of streaming, that's why, Fubo is not relying on anything. Fubo has content across all the major sports leagues, across so many different channels and partners, across news, across sports, everything like that. So Fubo puts themselves in a pretty good position, right? In terms of streaming, content is king. And companies that control this content have a lot of power over Fubo. It's a classic power of suppliers dilemma that the Porter 5 forces. So that's not something we can really debate either. There's no doubt all these guys have power as well. We understand that, right? But at the same time, you got to think about it in terms of my baby came in, paid me a visit. Hold on, folks. My baby's here. What are you doing back there? What are you doing back there? We all see you. We all see you. Who are you hiding from? You can't be here, dude. We got business going on. So when it comes to Fubo negotiating rates, no doubt, that's always going to be tough negotiations, but Fubo is also in a pretty decent position as well because they're starting to reach some critical mass, right? They should likely hit 2 million-ish subscribers plus here in a very short amount of time, right? And we're talking about a huge growing player in the space, so no one really wants to burn their bridges, let's just call it that, with Fubo. And Fubo has so many channels that they could afford to not have a few, right? Obviously, the most key are always going to be the ESPN-type networks, but let's not act like these players don't. And we just saw with the Charter and Spectrum deal, right? We saw, I don't want to say Charter won, but I also don't think Disney won. I think both had to, give and take a lot. And that's with a big player in the market, about 14 million subscribers they had there. But let's keep in mind, that's a company that's going down. Their subscriber numbers keep going down, where Fubo keeps increasing exponentially. So you ask, who's a more important partner 5 years out, 10 years out? If you're somebody like a Disney, it's certainly Fubo. So you got to keep a good relationship there. So rates have to be fair. They have to figure out everything as far as that goes. But I think that's just something you're always going to have to deal with in this business. It's part of the process, negotiations, right? So far, Fubo's done a pretty decent job there. There's a lot of competition in the sports industry with Hulu TV and YouTube TV as other alternatives. Hulu, and I know they're spending a ridiculous amount on advertising right now, right? Hulu has live sports. How many times I've seen that commercial is ridiculous, but I don't think they're as big of a competitive threat as YouTube TV is. I think YouTube TV is for sure always the biggest competitive threat to Fubo. I think everything comes after them. I just think they're in a whole other category when it comes to YouTube TV. I think YouTube TV and Fubo are really going to be the ones battling out for number 1 and number 2 place long term. Content providers can easily move to these platforms, which would give Fubo little room in terms of negotiations. I don't know. Didn't we just see that Charter situation? There's also a limit in terms of the amount of these costs that could be passed on to consumers. Fubo TV is already one of the more expensive offerings in the market. A Fubo package costs $75, which is in line compared to Disney's $70 package of Hulu, Disney Plus, and ESPN. Due to these factors, I believe future improvements in Fubo's gross margin will be constrained. We'll see about that. at the end of the day, Fubo does a great job of kind of upselling. Like, for instance, I use Fubo and I'm part of the $100 package club. So that's something to keep in mind there. Valuation. Fubo management is, and also remember the ad business has substantial kind of runway of growth in front of it. I think that's the more hidden business that you're going to really see come to fruition over this next, let's just call it 3 years or so. Valuation. Fubo's management is guiding for full year 2023 of 1.565 million subscribers to 1.585 million subscribers in North America and around 380,000 to 400,000 subscribers internationally. This represents growth of 9% and 7% respectively. Full year. Now, keep in mind, I think they're going to beat those numbers. Based upon the Google Trends data we're seeing, it's off the charts. And then you had the Charter Spectrum situation. Oh my gosh, like how many new subscribers did Fubo just get from that? Tens of thousands, hundreds of thousands? Like, we'll see. But certainly it's a pretty big number. And this is likely going to be the biggest Google Trends data we've seen for Fubo, certainly in its history, by a mile in September in general. So keep that in mind. Full year revenue for 2023 is expected to be about $1.3 billion, which is around 30% improvement from 2022 number of $1 billion. I think they could come in with a beat there as well, since subscriber numbers are likely, in my opinion, going to come in much stronger than expected. I think revenue beat is likely coming next quarter as well. It won't be as much this quarter because remember, all these subscribers signing up in September, very small amounts of revenue are going to be calculated, certainly in this quarter, right? Because September's the last quarter. So it's really going to be affected, obviously, in the December quarter and kind of moving forward, right? However, it is my view that the headline figure of $1.3 billion is misleading, given the nature of Fubo's business. I would make the argument that Fubo's true net revenue is actually only 13% of that amount. Taking out the content-related costs, it gives a net revenue of $169 million. Considering that Fubo now has a market cap of $746 million, that would imply a price-to-sales ratio of 4.4. I believe that this is an expensive price to pay for a business that is in the competitive streaming industry, that is saddled with high debt. While Fubo stock could still rally from these levels due to good headlines and momentum, long-term oriented investors might be better off on the sidelines. So I think he brought up a lot of fair points there. I think a lot of those, some of those points you can't argue against, especially in regards to kind of the goodwill and some of the things he was speaking about there. There's not really an argument that can be made against, right? The fact is they're still at low margins, but when you go from negative margins to now nicely positive margins, as long as they can continue to build on those numbers over this next few quarters, then we could be talking about a company that has 10% gross margins and 12%, 15%, 20%, right? So I look at a stock here that is pretty heavily beaten down. I think they haven't had as much negotiation leverage when it goes to negotiate with the networks, because they've been such a small player. I think as they scale out and become a bigger and bigger player and attract more and more subscribers, I think they'll get more respect. I think they're going to become a very profitable company and a very cash flow positive company. And I think it's coming sooner rather than later. So, and the stock's obviously a beaten down dog. It's a $2 stock here today. So yeah, that's my opinions and perspectives. I appreciate, that gentleman kind of sharing his opinions and perspectives. And I love to kind of always read through those bearish and bullish points and things like that. And I hope you guys enjoyed this video. Do this with your stocks. Always try to seek out bearish points. Why you shouldn't be buying that stock, why it's a bad stock. And then go through those and say, how much of this is accurate, how much of this is real, and does this hold back my investment thesis or not in that stock? I think it's always beneficial. So appreciate everybody joining me as always. Thank you so much for being subscribed, folks, and I hope you got a lot of value out of today's video. Much love. I'll put that Seeking Alpha link that from a few months ago that gives you like a free trial. If you want to read any articles on your stocks that people have written, check that out. That will be pinned comment down there. Much love and have a great day.